Good morning. Not you, Robin. We're dog sitting. Hi, Robin. I know. Dog wants to play, but we gotta work. I'm gonna wait for a couple more people to join, and then we'll get started with the most must-see finance live on all of TikTok. My name is Kenneth. Hello, good morning. Come prepared. Let me know your stock trading and investing questions. And by the way, for the people who are sticking through in this live, hit the screen a whole bunch. There's not a lot going on in the first few minutes. TikTok pushes this out to as many people as they possibly can. So you got to hit that screen like I know Miss T is doing right now. She's a regular. You got to hit that screen a whole bunch. It brings in a lot of traffic. We're at like 12 people right now with like no likes. As soon as those likes start coming in, you'll see that number changes. It doesn't really affect me in any other way other than it makes the live more interesting because there's more people asking more questions. Not last Sunday, but 2 Sundays ago, we had 1,000 people in here. That was the most I've ever had in a live. I don't know if we'll do that again today, but come prepared. Let's go. I got an hour here to answer all your stock market and investing questions if you have them. If you don't, I have on my screen the earnings reports for the week, which we can go over. It's going to be another busy week of earnings. Some interesting ones are Monday.com on Monday. That's funny. Arista Networks on Monday and Waste Management also. On Tuesday, we have Shopify, Coca-Cola, Marriott, and Hasbro for the morning pre-market. And then after the markets close on Tuesday, it's going to be another busy day. Airbnb, Upstart, Robinhood, and Lyft are reporting earnings along with many others, including Zillow, which might be interesting because of how earnings are going with the housing market right now. How do we get started? You get started by hitting that follow, and then you get started by opening a brokerage account and thinking, what kind of investor do you want to be? Are you trying to take profits now that you can use to cover your daily expenses or your yearly expenses, or are you investing for the long term for retirement? If your answer is for retirement, then you want to open something called a Roth IRA. By the way, there's 800 people in here right now. If you ask an investing question, do not leave. I will get to everyone. I try to answer as many questions as I can. I see Risa's asking about bets, which we'll get into in a second. Let's pull it up right now, and then we'll come back to earnings a little later because we got a lot of earnings reports coming up this week. Bets is Roundhill Sports Betting and Gaming ETF. Interesting, especially now that we're seeing this big surge in sports betting and online gaming. Do you use a scanner? Yes, I do. Year to date, Bets is up 6.69%. In the last 12 months, it's up 13.5%. It hasn't been public much longer than that, but since going public in 2020, the fund is up 25%. It did during COVID, which makes sense. We saw a lot of stocks go crazy during COVID. It did hit $32. It has since pulled back down. The thing about this fund, though, is that it has terrible grades. It's got expense ratio of 0.75, which is very high. Anything over 1% is considered to be really, really high. So 0.75 is getting close to that like really high range. They offer no dividends, so they get an F for that. These aren't my grades. They're from Seeking Alpha. It has a risk of D+, liquidity of C-, which means it might be hard for them to unload some of these shares in the event of they had to. And the only thing that they have going in their favor right now is momentum at a B+. One option when you look at a fund like this where it has really high fees, no dividend, and it's exposing you to 38 companies all in one specific niche, sometimes this can be good. You can expose yourself to a variety of semiconductor stocks and all of them do well. When it's something more risky like online sports betting, only a few might do really well. And it could, if they have a lot of holdings, this one only has 38. But if, let's say, 30 of those are underperforming, it can drag down the overall performance. So one thing I like to do when I look at something like this is I like to say, what are their top 2 or 3 holdings? And maybe I'll buy one of those individually instead of the fund. So in this one, the number 1 holding is Flutter Entertainment. I've never heard of it. Then DraftKings, which I own already. And then Evolution, Entain, Kindred Group, Churchill Downs, some French company, another foreign company, Playtech, and Sport Radar. So a lot of stuff I've never heard of. So one option might be to just go and buy 2 or 3 of their top 10 holdings if it's a sector you really like. B. Harrison, do you recommend getting into trading? It depends. Trading can be great. You're your own boss. You make your own hours. You work as much or as little as you want. Do you take your profits, I'm done for the day. Or you can go and make another trade. I usually don't like to do that because it gets you in that mindset of like, I gotta make more, gotta make more. And that's when you start making bad decisions. So as a stock trader, the way I usually worked was I would have I usually have anywhere from 1 to 6 trades going at a time. And if one is profitable, I take my profits, I'm done for the day. That means I can sit on the couch and play video games. I can go to the gym. I can go for a walk. I can travel. I can work from anywhere. The downsides of trading is the income is not guaranteed. You're on your own for your healthcare. In the United States, it's very expensive. I pay $460 something a month through Care First. My deductible is $7,500. So very expensive. Also, if you have people in your home who depend on you, you don't have stable income. That can be a huge downside. So there's a lot of risk. And you'll have months where you make tons of money. Inexperienced traders are like, oh, this is how it's going to be every month. I'm going to go buy a Mercedes. I'm going to live beyond my means. Then they have 2 or 3 bad months and they stop trading. When I have 2 or 3 really, really good months as a stock trader, I sock away as much money as I can because I know there's going to be a bad month, or there's going to be a month that starts off really well and then ends terribly. So you just need to know of all the risks. Fuzzy was one. Is TKO doing well? Let's take a look. At the moment, I think TKO is doing... Well, TKO is WWE and UFC. For those who don't know, they merged. Since it started trading under TKO, it's only up 2.79%. They have no dividend. WWE did very well over the last decade because of their WWE network, which they then sold. They've been doing a lot of shows in Saudi Arabia, basically a name your price kind of thing. They had some wrestlers who were retired, and the Saudi government who wanted this show to come to their country was like, name your price. And these wrestlers were like $3 million, and they were like, done. I mean, they were just throwing money at this. So that was very lucrative for them. But now that they've sold their network, now that they've sold, so Peacock has their network, and that was a huge drive of sales and new revenue for them. Now maybe it might trade sideways. Someone says, I'm trying to do 0-day options. Good luck. I don't trade options. Bet on Yourself says, do you use a scanner? Yes, I do. I use the one on TD Ameritrade's website, but Seeking Alpha also has a really good scanner, and it's totally free. There's 500 people in here so far. There were 800 a few minutes ago. Hello to everyone. Welcome. Read this here. You can learn a little bit more about me. Ask your day trading, swing trading, investing questions. I can help. If I can't help, I'll send you to someone who can. And make sure you hit that follow. This is what we do here. Teach people how to invest, and I don't sell a course, unlike everybody else on this app. God, if I see one more video on my For You page that's like, hey guys, I'm scrolling. Hey guys to me is an automatic scroll. I know they're going to try to sell me something. NP Yat says, how? The deductible is $7,500, but it's not per month. It's per year. My per month was $460 or something like that. How much do you make monthly? I don't share that. If I had $1 million in my account, is that enough to make $200,000 a year day trading? You can't really predict that sort of thing. Day trading is too unpredictable. You and I could both get in on the exact same trade on the exact same day and have vastly different profits. You could buy something that's up huge, and then by the time I get into the trade a couple days later, it's no longer a viable trade, and I lose, but you gained, or vice versa. You can't really set your clock to it and say, oh, I have $1 million, so I guarantee 200,000. There's just no way to predict. At what point do you sell a long-term investment? So very good question. I'm a long-term investor. I've owned these stocks right here. I'll break it down for you. WWE I first purchased in 1999. Apple I purchased in 2003. Meta in 2012 on IPO day. I bought Meta or Facebook back then on the day they went public, and then I loaded up a month later when the stock tanked. All the headlines were, oh, this Facebook thing, no one's really going to use it. It's stupid. It's a waste. What is this thing? It's a trend, whatever. And my only reasoning was, I don't think that's true because I use it. And I loaded up. I bought as much as I could back then. And I sold some to buy my home. This is not my home. We're dog sitting for the month for my girlfriend's parents who are traveling. But I sold some at that point. if I could have gotten a mortgage a traditional way, I wouldn't have sold any. But I went to the lender and he said, "So what do you do for a living?" And I said, "I'm a stock trader." And he burst out laughing and was like, "You're never going to get a mortgage ever." That's another risk of being a stock trader for B. Harrison, who was asking about being a stock trader. You got to pay cash, or you have to have a parent cosign or something like that. And so I looked at it, or a partner, whatever. And I was like, well, I'm not going to get a mortgage. I don't want to rent. I have all these investments down here that I've purchased years ago, and I'm up huge. So that was when I sold. I didn't sell everything. I still have a lot, and I've been buying back slowly since I unloaded on some. However, if it wasn't for that, I would have never sold. I'm a buy and hold. I hold till I'm done. At a certain point, when I am approaching retirement, whenever that is, I will look at my largest growing stocks, the ones that have had the largest percentage gain. So it'll be stuff like Apple, NVDA, Meta, whatever. And I will likely trim back those positions to put them into safer investments, because I don't want to take a risk with being retired and having no income that my like nest egg is going to crumble, that there could be some really bad news. And you look at Tesla, there's a lot of big companies. General Electric in the 90s was like the safest investment. Everyone owned it. And then they got too big, mismanagement, blah, 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 and it tanked. So I don't want that to happen with my investments. So likely I'll start trimming when I get closer to retirement and putting money more into stuff like SCHD or real estate investment trusts, or even like monthly dividend paying, maybe a little covered call, but not too much, because I don't want to lose my principal investment, or bonds and CDs as I get closer to retirement. Meta is where it's at. I mean, right now it seems like that. User 5888 wants to know where to get my resource guide. It's on my website. My website is kennethsuna.com. It's just my first name, my last name. I cannot put it here on text because TikTok will suppress the views because they don't like websites, probably to prevent spam and scams and stuff like that. So if I were to put it here, there would be like 2 people in here. You wouldn't even get the alert that I was live. So it's my website is just my name, kennethsuna.com. Click on the menu, which will be down here on your phone or up here on your computer. I get DMs from people going, "I went on your website, I couldn't find it." The menu. Click on the menu, it'll open. You can get the resource guide, which has every website I use to do my own research. There's a template. There are 2 templates, one to compare ETFs and one to compare stocks. Young Lou, hey, what's up? I haven't seen you in a while. Renting versus buying a house, in your opinion? I think it depends on the person, the situation, and the rent. I have a friend whose mom never owned a house, rented her whole life, was getting close to retirement and said, "I want to be a homeowner," and went and bought a house, and called me and was like, "Hey, you're a stock guy, right? Can I ask you about money in the stock market?" And she said, "I just bought a house and my mortgage is really expensive and blah, blah, blah." And I said, "How much is your mortgage?" And she was like, "Oh, it's like $3,500 a month." And I was like, "What was your rent?" And she was like, "Oh, it was $1,200 a month." And and she's 60. And I was like, "Well, why did you do this? Like, you're paying more than double on your mortgage and your rent was like $1,200 or $1,300. I don't understand." And she was like, "Well, I wanted to be a homeowner." And I was like, "But it's costing you so much more. How are you going to retire? You don't have any money saved. You don't have any, where's the money for the mortgage going to come from?" And she went, "I don't really know." So, it depends. There's always a scenario in which renting is acceptable. There's always a situation in which buying is a great idea. But, unless you're planning on buying a home and selling it every couple of years, if the markets are skyrocketing, you really are buying it for the future or to pass it on to your kids if you're going to have them. All right, I'm going to scroll the bottom and I'll work my way back up to the top. Kevin says, "How?" I don't know what what? How about AMD? Is it good to buy now? I can't give you financial advice, and I wouldn't give you financial advice. That's not what my channel is about. What I would do is I would go and say, watch the video that I just posted on AMD the other day. It's comparing AMD to Intel. Go watch that video, read through their fundamentals, go on and look at what the analysts have to say. I'll do it for you right now for AMD. We can take a look here. AMD is currently $172 per share. Their 1-year price target is $194. That's a 12.5% move to the upside. The other thing I really like about AMD is that it has a strong buy rating according to the analysts. There are 34 analysts covering AMD, 34. 0 recommend that you sell it. 5 recommend that you hold it. That means if you already own it, you don't buy more, you don't sell it, you just own it, or you just hold it, I mean. 29 of the 34 analysts recommend that you buy AMD. I can't tell you what to do, but they are saying to buy it. It has a 1-year price target of 194. On average, the highest price target is 270 and the lowest price target is 140. And that's probably from the people who have a hold on it. I don't even know says, what are high paying dividend stocks, safe dividend stocks? Good that you said safe. Anytime I do a video on dividend stocks or dividend ETFs, people always rush to the comments to go, you didn't mention this ultra high risk one. Why didn't you mention that one? Because it's not safe. And usually covered call ETFs, which is what I'm talking about, covered call ETFs are not dividend ETFs. They pay a dividend, but they're not dividend ETFs. A dividend ETF is an ETF that invests in dividend paying companies. A covered call ETF sells covered calls to make money, which then they pass on to us as a dividend. They're different. Covered call ETFs are very risky, or there is an element of risk. Individual stocks that pay dividends also carry risk. I like to look at companies and say, well, the longer the track record of paying a dividend, the safer it is. And that's generally true. However, there are instances where you look at a company, just like a couple of weeks ago, Walgreens, the big pharmacy, they increased their dividend every single year for 48 years. Every single year. This year, they've cut it by almost 50%. So you could have been, I'm investing 48 years. It's very safe. Not anymore. Things change. So for you, the best thing to do if you're unsure what to do is to look at dividend-paying ETFs. SCHD, SPHD, SPYD. These are all ETFs that pay dividends. You can check my ETF playlist right here on TikTok. It covers all of them. You can also check my dividend playlist, which more focuses on individual companies, but still does cover some ETFs in there as well. But you don't always have to go in the highest risk or individual stocks. I like this one, I like that one. Coca-Cola, McDonald's, Walmart, Altria. These companies have steady growth or steady revenues coming in every single year, and they'll likely be able to pay forever, but you don't know. What do you think about C3 AI? I like it. I don't own it, but I do like the AI space right now. Let's take a look here. C3.ai is $28 a share. It does have a warning. It says, warning, C3AI has negative earnings per share revisions and inferior profitability compared to other information technology stocks. Their grades are terrible. Well, valuation is B-. Growth is C+, profitability D, momentum D, revisions D, and it has that warning. I'll read a 1-year price target as well. Let's see here. According to the analysts, it has a negative 3% downside. So analysts are thinking the stock could go down. There are 4 sells, 5 holds, 3 buys. So it's a little all over the map. When it comes to anything speculative like AI or the future or high-risk investments, such as this one that literally has a warning on it, it doesn't necessarily mean that it's bad, but it's not the kind of thing that you want to go and buy the most amount of shares. I think a mistake new investors make is they look at something and they go, I think this is going to be huge in the future. Maybe you're right, maybe you're wrong. But at something that's $28 a share, how much are you willing to put in to risk? 100 shares is $2,800. It's almost $3,000. MJ says, what do you think about TFC? TFC. Truist. Truist is $37 a share. They pay a 5.8% dividend, which is very high. In the last 12 months, the stock is down 25%, which is concerning. That's also probably part of the reason that the yield is so high. The dividend is a percentage of the stock price. So the more the stock price falls, the higher that dividend becomes. And that's not a good thing. And conversely, if the stock skyrockets, that 5% will decrease. So it'll be 4%, 3%, 2%. And that's why you can look at a company like NVDA that pays a dividend, but it's like nothing because the stock has skyrocketed so much. So that's a little bit concerning that it's come down so much. They have a dividend safety grade of C-, which I think the number is like anything with a C- or below has like a 60-something% chance of cutting their dividend. Truist has raised their dividend 5.52% in the last 5 years. but they now have the C- safety grade, a little concerning. And they have 9 years of dividend growth. They're profitable. They have a profitability grade of A+, but I guess something in the numbers is concerning the technology that makes it feel like it could not do well. Since your favorites have increased so much, what stocks would you invest in today? Check my video. You might have to scroll back a little bit, but it's stocks that I'm looking at for 2024. Like you said, most of the stuff that I have has increased so much. For 2024, I'm looking more at dividends. And the point I also make in the video is you can't always be buying new stocks. You know, if you are, you're probably spreading yourself too thin. I have someone who follows me, sent me a DM on Instagram the other day, and he said, here are all the stocks that I own. And it was just like a copy and paste from his notes on his phone. And it was like one share of this, one share of that. And he had like 250 something stocks in his portfolio, but one share of each, one share of each. I was like, dude, what, this isn't going to do you any good. If one of these stocks goes up 400%, you're on one share. You're going to have no gain, like monetary. Like you're going to have a 400% gain, but it's on one share. You should focus on a smaller amount of shares. You're spreading yourself out too thin. Your money is spread out. So nothing is going to really do well for you. And a lot can underperform and drag down your whole portfolio. 250 stocks is like an awful lot. So trim it back. But for me, I generally just focus on a handful of stocks that I like and that I own. It's most of my big tech and then some dividend payers and index funds. If anything, I'll be adding to stuff throughout the year that I already own. No, I am not retired now. Good morning. Hey, Jim Bunny, good morning. Where can I get do your own research guide? User 588. I already answered your question, so you must have left and then came back. It's on my website. It's kennethsuna.com. Click on the menu. Thoughts on SFY for kids long term? SFY. Oops. SFY. Hey, why isn't it going? SFY. Okay, here we go. SoFi Select 500. Is this their version of an S&P 500 index fund? Yeah, it is. They have no expense ratio, so that's cool. You might have to have a SoFi account in order to have this one. The zero fee ETFs. Generally, the zero fee ETFs, like Fidelity has a bunch, you can't invest in them unless you have a Fidelity account. It's their incentive to get you in. It's their most successful and it's their most popular fund, S&P. So their vision is the fees on this thing are so low anyway that they're not really probably concerned about making money. What they really would want is your money in their account, so they can use your money, loan out your money, loan out your shares, and convince you to buy their other investments that do have fees. So I like it. I think it's great. Any S&P 500 is great. Steve, I'm 38. What is your largest percentage gain? My largest percentage gain on an individual stock for an investment, I'll go over both for you if I can find it, because I'll have to go back a few years for the stock trades. My largest percentage gain on an individual stock, let's see here. I have a 973% gain on Apple. What else do I have that has big growth? 551% on NVDA. 231% on Netflix. 214% on Palantir. I know I've got some other big winners in here. I'm just trying to scroll through my portfolio here. Oh, Meta, duh. Meta, I have an 1,800% gain. Meta is probably my biggest investment. I knew I was missing one. I bought Meta on IPO day in 2012. And I am up 1,800% on those shares. My largest trades, I would have to look forever to find them. I don't want to waste time. But my largest trades were Kodak and AMC. You could have borrowed against your stock. Yes, you can do that. What do you think about VEQT? VEQT. Vanguard All Equity. Are you sure? Oh, it's Canadian. I don't know anything about Canadian ETFs. I'm sorry, and I use Seeking Alpha that shows me nothing. It says that their top 10 holdings are blank, their fees are blank, nothing. It shows me nothing, so I really don't know. But if you're saying that it tracks VOO, um, you know, VOO is one of the greatest S&P 500 index funds around, so I think it's fine. LJ Mass, what is WWE? Really? John Cena, The Rock? How are you, Kenneth? Great last couple of videos on YouTube. Hey, thank you so much. How does one know when to get in? You just get in. This is for NP Wyatt. I hope I'm saying your name correctly. You just get in. It doesn't matter if it's at all-time highs. Who cares? You're not buying. If you look back historically, every time it hit new all-time highs, at the time, it's only gone up since then. So the people who are saying, well, what if it's over this time? It would have to be some sort of doomsday scenario in which the stock market wouldn't even matter. You know, in 20 years, we're going to be laughing about when the S&P 500 was 5,000. And that's the approach you should be having. You're not trying to buy your whole position today, right? If you want 1,000 shares of an S&P 500 index fund, you're not buying all 1,000 now. You're going to buy 100 today and 100 next year and 100 next year and 500 one year if, you know, your uncle that you no longer talk to dies and gives you a bunch of money in his will. You're going to be adding different amounts at different points in life. Maybe you'll make more money one year. You get a promotion, then instead of 100 shares, you can buy 300 shares. You know, you can buy every month. You can add a little every month, depending on how you invest. So, you know, it doesn't matter. Yes, you could buy it today at 5,026. It's at all-time highs. You could buy an S&P 500 index fund, and there could be a recession in 2 months, and it could go to 4,100. Doesn't matter, because your strategy is a little every month. So you'd be buying all the way down, and it would lower your cost basis. And then when the market's recovered, you would have a much lower price point, entry price point, because you were averaging down in something quality. Averaging down in garbage is a terrible idea. Buying Peloton every time it hits a new low is throwing your money away. Buying an S&P 500 index fund in a recession is really, really smart because it's giving you diversity, 506 companies. You just steadily add. Don't worry about it's at all-time highs. Oh no, I'll wait for it to go down. In the time you're waiting for it to go down, it could go up another 30%. Neo has a future. I don't know. I mean, it might, but I don't touch it. It's too risky for me. 3 ETFs as a base layer for a portfolio. Can't afford QQQ. For Mel, if you can't afford QQQ, QQQM, M as in McDonald's, is the exact same thing. It has the same investments, the same growth, the same dividend roughly. It has slightly lower fees and it's I think half price. QQQM is $179 per share. There might be other NASDAQ 100 ETFs. I don't know, by the way, if a lot of people know this, but you can use Seeking Alpha's website. Their search bar isn't just to type in ticker symbols. It's not you just go in and type in AAPL and it pulls up Apple. You can use it as a search bar. So if you're interested in finding agriculture ETFs, you can just type in agriculture ETF and it'll give you a list. You can type in NASDAQ 100 ETFs and it'll give you a list. QQQM is 179. QQQ is what, like 3 something, 4 something? It's 437. So it's a much cheaper alternative. It's the same exact thing. Is it the right time to invest in Tesla, Meta, Google when they're up 100%? That is totally up to you. I can't tell you to invest in something that's at all-time highs. I can't tell you to invest in anything, period. This is really a channel about education, teaching people how to trade and how to invest, not telling them now is the right time, yes, go buy it, or no, now it isn't. You know who's going to catch flack if I say, yes, now is the right time and they all tank? You're going to blame me. If I say, no, now isn't the right time and they skyrocket, you're going to be pissed. You're going to go, it's that guy on TikTok. You really want it to be your own decision. And like I said earlier, you never have to buy 100% of your whole position. You can always start with however many shares you want, 10 shares, 25 shares, whatever, and just slowly keep an eye on things. If you're right about a recession and the markets tank, then you can go in and you can buy them at a discounted price. These are all mostly very high quality companies, Meta, Google, etc., including NVDA. But you are also running the risk at buying stuff that is extremely overextended and very expensive. But, if we had said this a year ago for NVIDIA was like, what, $400 a year ago? And people were saying, oh, this is crazy. Nobody's going to buy it here. Eventually, things will pull back. We just don't know when. In the meantime, you could buy it, if you had purchased it in January at $495, it's $721 now. But does that mean just because it went up $200 in the last month that it's going to go up $200 every month? No, it's 721. 721 right now. NVIDIA. It could crumble here. By the way, Tesla is down considerably. So if you believe in Tesla long term, you could be getting a buying opportunity here. It's down 20% year to date, 22%. So on the other hand, you might be looking at Tesla going, I think this company is, their massive growth days are behind them, and I think it could fall a lot more before leveling out to a more realistic valuation. Then maybe you sit on the side. And if you're the type of investor who goes, I'm just not sure, then you could buy a couple shares now and wait. That way you have some skin in the game. Maybe it recovers and it moves, or maybe it crumbles. You haven't wasted all your money either way. Ghost says, doesn't share the monthly, LOL, but trying to give advice. You're incorrect. I'm sure you're gone by now, but I don't give advice. Twilio. By the way, you guys don't have to leave the same comment 55 times. I get to the bottom, and then I'll work my way back up every time. So I will see your comment. You don't have to spam with 15 questions in a row. I'll get to you. Twilio. Twilio is down 5.6% year to date, but in the last 12 months, it's up 16%. In the last 5 years, it's down 38%. And since going public, it's up 110%. The headline here says the turnaround is gathering steam and you should buy it. That's one analyst's opinion. Twilio has a 1-year price target of $74. It's currently $71. So the analysts are not really bullish on it. Your resident says, when scanning for stocks, what variables do you scan for? Go on my YouTube channel, and when you can search for my videos, type in scanner. I have tons of videos going all over all the variables in my YouTube channel. Or if you want, when you leave this live, you can send me a DM and say, hey, could you tag me in a scanner video? And I'll just tag you in one that goes over it. I don't share how much I make. Okay, I'm going to scroll down to the bottom. I'm all caught up here. This is for Jay. What is a good index fund to go into that is a better return than a savings account? Well, you can't look at saving and investing are not the same. No one will ever save themselves into retirement unless they're making millions of dollars per year and they're just throwing cash in their account. You will never save yourself. You have to invest. So I don't care that a bank is paying 3 or 5% on high yield. It is not the same. You can find a company that is paying a 2% dividend, but has a considerable growth, way more growth. So you want to look at a variety of ETFs. For Jay, I would say go watch my pinned video on investing for beginners. It goes over a breakdown of a variety of different ETFs. They all have dividends or really high growth. They will all outperform long-term a savings account. Happy Old Bag says, I remember when NVIDIA was around 80, right about the 2016 election. That's crazy. I bought NVIDIA. Let me see. I'll pull it up here and tell you where I bought it. I purchased NVIDIA on September 23rd, 2022, and I paid $125. And then I bought more in October of 2022 at $110. Is 23andMe a good risk in the biotech space, the largest human DNA database in the world for therapeutics? I think 23andMe was having some issues. Let me see if I can find it. Their symbol is me. Is this right that it's 62 cents per share? I would definitely not touch this thing. TB says, AMD, thoughts on this? Go check the video I posted a couple days ago comparing AMD to Intel. It's all there. Rodriguez says, WWE. Yes, WWE outperformed Apple over the last 10 years. How long is long on Tesla? I purchased Tesla in 2016. Johnny says, I bought NVIDIA at 40. Nice. The market can stay irrational longer than you can stay solvent. Funny, I like it. What is a better ETF? What is the better ETF or index funds? ETFs can be index funds, so they're kind of similar. What is your investment increase so far in terms of percentage? Well, I read over some percentages here. Meta, I'm up 1,800%. Apple up almost 1,000%. Shopify, I think, was up 300 or 400%. Let me see. No, 261%. Palantir was up 214%. Mel, I want to invest. I want to divide $750 per month between all 3 ETFs to build up. Any suggestions? Yes. So I won't give you a suggestion, but I'll ask you a question. It depends, first of all, on your age. So the older you are, maybe you don't want to put as much into tech, or at least as heavy into tech, because it can be more volatile, especially now that a lot of these funds are up. I'm not saying neglect it entirely. You still want tech in your portfolio. But if you're going to go in all three funds, you know, you could skew heavier towards tech if you were younger. If you were a little bit older and you didn't want to take on too much risk, then you could go heavier into dividends. You could divide 750 divided by 3 is 250 in each. So you could just make it even, 250 in each, or you could do 300 or 400 in one and 150 in another. You can skew it however you want based on your own risk tolerance. AMD stock chasing NVIDIA. Yes, I think they are. I don't know if they'll catch up, but they're definitely maybe second best. Sebastian, I got 2,500. Just tell me what to buy. Nope. How do I learn if you don't teach? I do teach. I just don't tell you what to buy. My channel is all about it. This is also for Sebastian. I'm not going to come out and tell you, hey, you should go buy stock in this company. Because what did you learn? Why? Why are you buying that company? What about it is a good buy? You don't know. You're just saying, hey, you're a stranger on TikTok. You have 300,000 followers on all the social media platforms. You tell me what to buy. Maybe I pick right, maybe I pick wrong. Either way, it's illegal. I can't give you financial advice. What happens if I say, go buy this stock and it tanks? What did you learn? You learned not to trust strangers, number one. And number two, you didn't really actually learn anything. So if you go back and you watch my videos, you see how we break things down here. We look at the fundamentals, comparing two companies, or the total, the holdings breakdown for two ETFs, so you can learn. Why is this one up so much this year and this one isn't? Oh, it's because 50% of their holdings are technology, and technology is ripped over the last year. So you're learning versus me just telling you. JEPI is the way to go for 90% of you here. QQQM is the right time to buy. What is the website? My website is kennethstuna.com. It is, click on the menu and you will find all of my free resource guides. I have a free resource guide on all the websites I use for my own research. I have a template on comparing two stocks side by side, and I have a template on comparing two ETFs side by side. I also have a little article or guide or whatever, or briefing, whatever you want to call it, on dividends. Because there's so much misinformation on dividends. People always say, oh, the dividends don't outpace inflation. Oh, 2%, I can get more in my savings. That's not the point of dividends. So I have a little article on explaining what dividends are as well. Rodriguez says, what's WWE? I think I answered that one already. Feelings on AMD over the next couple of years, can they make big gains chasing AI? Anything is possible. There's no guarantees in the stock market. NVIDIA is the clear leader, but it's already up massive. AMD might be the one that's trying to play catch up. The analysts think it can go from 172, which is where it currently is or will be tomorrow, to 194. That's around a 12.5% gain. Visa is a good stock too. Yes, Visa is good. I made a video comparing Visa to MasterCard a few days ago if you want to go watch it. Do you own ARM? No, I don't. I'm heavily invested in NVIDIA, and I only own the one. I am a fan of JEPI. Buy partial shares if you can't afford a share. Yes, partial shares are a great option for people who cannot afford full shares. VXUS. Oops, that's the wrong symbol. VXUS. Vanguard Total International. I'm not a big fan of Total International, and I will tell you why. Yes, it gives you exposure to the world. However, it has 8,500 companies. That is 8,563 investments. Not all of them are winners. In fact, the vast majority of them are losers. You can see it over the last 10 years. The fund is up 11%. That sucks. An S&P 500 index fund, which is the 500, the S&P 500, is up 170% in the last 10 years. QQQ, VGT, these are all funds that invest in tech. QQQ and VGT are up hundreds of percent in the last 10 years. SMH, which is the VanEck Semiconductor ETF, is up 850% in the last decade. VXUS sucks. It's up 11% in the last 10 years. That sucks. Not only that, but their dividend is, it pays an okay dividend at 3.27, but the growth is near non-existent. Sebastian says WWE wrestling. Yes, WWE wrestling, pro wrestling, John Cena, The Rock, has outperformed Apple over the last decade. A lot of people don't know this. They think wrestling, it's fake. Who cares? It's stupid. It's number one, a $1 billion company. Number two, they created this thing about a decade ago called WWE Network, which was like their version of Netflix, and it rocketed the stock. The stock went up 950% in the last 10 years before it merged with TKO. In that same period of time, that same 10-year period, Apple went up 918%. So WWE, the fake stupid wrestling, outperformed Apple. Peloton, yeah, Peloton sucks. You're getting to that point where I start to lose my voice. NYC Food Blog, hey, great channel, by the way. You all should follow NYC Food Blog. When do you think the feds will cut rates this year? There were rumors of March or May, so we'll have to see. The guy from Boston, thanks for the follow. May I ask what you work with when not doing stocks? TikTok. I'm a full-time content creator. I make my money through brand deals. I don't sell a course. I don't sell one-on-ones. I don't do phone calls. One-on-one phone calls. I'm not trying to take your money. I did have subscribers. You could pay to be a subscriber on here for a couple months when the brand deals were totally dried up. And I thought, I'm going to have to go back and start trading, which I could do, but I don't want to. I like doing this. I added the paid subscriber live. TikTok will not let me turn it off. I don't know what to do. I've emailed them 15 to 20 times saying, can you please disable the subscriber live? And they just keep not responding. So don't do it. But I make my money through brand deals. Just tell them it's a bull market. Which one of the stocks split very soon? Nobody knows. These companies don't usually announce it until it's official and about to happen. They don't say, we're thinking about, they'll never really say that. It's usually just like, yeah, we're going to split. And then they announce it. Like Walmart has a split coming up later this month. If you go on my page and scroll down a couple of videos, I posted a video sometime last week on stocks that I think could split in 2024. So you can go watch that video, but I'm just guessing. There's nothing official here. Indexes go up, not always individual stocks. Yes, I agree. Shop, like Shopify, this is for fuck COVID, your masks, and your mandates. Okay. Shopify, let's see, I own Shopify stock. It is up 82% in the last 12 months. It's up 423% in the last 5 years. It is up, it hasn't been public for 10 years. Since going public in 2015, it is up 3,235%. It has strong buy ratings according to Wall Street analysts, and I will read you their 1-year price target. I think as more people move into e-commerce, more people start creating side hustles where they're selling their own products, more content creators. I don't have a line of t-shirts, but I could, and I would use Shopify to have a line of t-shirts. It's $90 currently. The 1-year price target is $80, so it's down 11%. So at the moment, the analysts are bearish on this stock. They think it could go down. Of the 31 analysts covering the stock, 3 recommend you sell it, 12 recommend that you buy it, 16 recommend that you hold it. So if you own it, they're saying don't buy more, don't sell it, just hold what you have. The lowest price target for Shopify currently is $56. So maybe they're seeing a slowdown in the e-commerce side hustle community. I don't know. There's a need for balance. I agree. Also from fuck COVID, your mask, and your mandates, do you use E-Trade? No, I don't. I use Schwab only because I used TD Ameritrade since I started trading. When I started trading 13 years ago, but I was an investor before that as well, and I had a TD Ameritrade account. That's always what I've had. They merged with Schwab a few months ago. My account is coming in April, so I'm still on Ameritrade. I've used the Schwab website. I think it sucks. There are rumors that they're going to try to fix it and make it more like Ameritrade to accommodate all the people who are very pissed about the now terrible website. People that I know love Fidelity or Fidelity, and E-Trade is popular as well, but I've never used them, so I couldn't tell you. Thoughts on DNA? I don't know what that means. Is that a stock or is that just are you just asking my thoughts on DNA? DNA. Ginkgo Bioworks. It's a penny stock. I don't usually talk about them. They're a lottery ticket. I'd only put in what I was willing to lose. Alibaba. Someone also is laughing. Joseph is laughing. I don't know what I said that was funny, but thank you. Alibaba is currently... I'm waiting. It is currently $72. They have a 1-year price target of 105. That's a 46% move to the upside if the analysts are right, and we know they're right about 30% of the time. So when you see a price target, it's not a guarantee. That's just them doing a really deep dive on the fundamentals and coming up with a price based on past volume and forecasts and stuff like that they think the stock can go. There are 21 analysts covering the stock. Of those 21, 0 recommend you sell it. 3 recommend you hold it. 18 recommend that you buy it. It has an average 1-year price target of 105 and a high price target of 139. And the lowest price target somehow is $10. Rivian, Valerie and Leo, I hope I pronounced your name correctly. Valeria, it might be. Rivian, I love Rivian. I view it highly speculative, even still. I see more Rivians on the road every day. Someone in my comments a couple weeks ago said, you never see them, so why would you buy stock in them if you don't see them on the road? And I said, well, I live in Washington, D.C. I see Rivians all the time. So I said, I'm going to go outside, and for a week, I'm going to film every Rivian that I see drive by. And for every Rivian I see, I'm going to buy 10 shares. In that week, I only saw 4. So my plan backfired, although I did, in the video, I went and I bought 40 shares of Rivian. After I posted that, the next day I saw 2 more, and they were different. One was a white pickup truck, one was a white SUV. I saw a blue one with temporary tags on it, so it was brand new. I saw 2 on the highway yesterday, one in that weird like green color, and I think there was like a black SUV too. So I'm seeing them more and more. Just because you're seeing them doesn't mean you should go and buy the stock, by the way. I'm just noting that I'm seeing more and more of these vehicles. I think Robin might come to say hello. All right. We have to take a little break now to say hi to Robin. Come here, Robin. We're dog sitting. Robin. Hey. She's got a little itch. Here she comes. Say hi to TikTok. Hey, come here. She doesn't really like the camera. She'll look away every time I put the camera on her. Robin. Robin, speak. Robin, speak. She's not in the mood. She really hates the camera. And there she goes. Well, that was fun. What a goof. Oh, now she speaks. VTI, not a fan. It just underperforms even an S&P 500 index fund. It's a total stock market fund. I think they have like 3,500 shares. I'm going to pull it up right now. It invests in 3,753 companies. And I just think the more you have, the more it drags down overall performance. You can look at a 10-year performance of this thing. It's up 159% in the last decade, which is really good. But an S&P 500 index fund in that same period is up 171%. So I think that too much is a bad thing. Hello again. What do you think about BABA? We just talked about it. DNA, just talked about it. I bought 2,000 shares of Meta on the first day at 25. Hey, so did I. I bought in day 1. What do you think of UWMC? UWMC. UWM Holdings. $7 a share. I've never heard of it. It's up 69% in the last 12 months. It pays a 5.67% dividend, which is pretty high. It has a dividend safety grade of C, so not great. They are a commercial residential mortgage and finance company. I've never heard of this one. Silly question. A silly question alert. Is it better to buy stocks at the opening or closing of the day trade market? Actually, it's not a silly question at all. If you're day trading, there are 2 trains of thoughts on this. Hey, Robin. There are 2 trains of thoughts. One, trading right into the morning is either, depending on your personal preference on this, it's really, really risky, or it can be very lucrative. Usually what I do is I'll notice a stock right at the open dumps. Then I jump in. It's called a dead cat bounce, or I call them bounce plays. It'll drop really hard right at the open. People overreact. All the sell orders from the night before, whatever is going on, the stock sells off really, really hard. I come in, I buy a large amount of shares, like 2,000 or 3,000 shares. It bounces a little bit. It's like a little relief rally, but it's temporary. So I'm just trying to scalp trade. I get in, I get out very quick. Maybe it goes up 3 or 4%. I sell. Maybe after I sell, it goes up another 3%. It doesn't matter. My goal isn't to make all the money. My goal is just to make some of it. Pops a little bit. I take a quick profit, dumps, and then I'm done with it. I don't come back to it maybe later, maybe a week later, maybe the next day or whatever. The other train of thought is you want all the orders to come in from the night before. You want all that volatility to cool off. And then you want to start trading at around 10:30. One time I had a stock trader who actually worked for a hedge fund, and he said 10:38 was like the magic minute. 10:38. That was like the time to make your trades. I don't know why. But like mid-morning is also pretty good. After all the chaos from market open has kind of cooled off, you can really see the direction of the stock that it's going in. If it's going higher and higher in the morning, it could indicate that by lunch or by afternoon, it could dip. And the opposite, if it's heading down, it could have a little afternoon rally. So you have to try all these things for yourself and see what works for you. Some people also like to trade in the last hour of the day. There's usually an uptick in volume in the last hour. VTI or SCHD, I can't tell you, but you might have heard my my little rant against VTI just now. SCHD is different. It's a dividend fund. VTI also pays a dividend, but it's like a total market fund. VTI pays a dividend of 1%. So it's very, very low compared to SCHD. The performance is better. SCHD is up like 70% in the last decade, I think. VTI is up 159%. So you're getting different things. SCHD is up 113%. So VTI still outperforms VTI, but the dividend is a lot less. So it really depends on what you're investing in. Are you investing in it for a little bit more growth? Then you'd probably want VTI. Are you investing for dividends and dividend growth? Because then you definitely want SCHD. If you already have an S&P 500 index fund, you don't really need the market growth. You've got that covered. You've got the diversity of the markets. You're going to get decent growth every year, around 10% on average. Then you add a second investment. It could be something dividend. Carter wants to know if we should short NVIDIA. I can't tell you what to do. Bet on yourself. The stock market open on Valentine's Day. Yes, the stock market's really only closed on Christmas and I think they're closed on Martin Luther King Day as well. And there are some days where they do half days. VXUS, I answered that already. Your resonance, is NVIDIA overvalued today according to you? NVIDIA has a price to earnings ratio of 58. And the price to earnings ratio for the sector average is 26. So that tells you that, yes, it's very overvalued. It's trading over the sector average. However, some people don't care about that. A lot of investors look at the price to earnings ratio and they think, oh, it's overvalued. It's going to come tumbling down. Or they look at it and they go, oh, it's undervalued. It's a diamond in the rough. It's not always a guarantee. It could be down because it sucks. It could be down because it sucks temporarily, though. And then you've maybe found a diamond in the rough. When you see something overvalued like this, there's so much momentum behind the sector right now and so much growth in the AI sector and semiconductors and smart technology that even though it's a little overvalued, a lot of investors just don't care. I'm willing to pay more because I think it's going to be even more valuable later. So the question right above that was from someone named Tricky saying, can NVIDIA go even higher? Yeah, it can go a lot higher. But nobody knows. I mean, the 1-year price target was, I think, $600. Yeah. So the 1-year price target, the average price target for 12 months was $684. It is now $721 within the first 2 months of the year. The highest price target is $1,100. The highest price target was $1,000. When the earnings came out, whoever had that $1,000 price target raised it another $100 to $1,100. There are 38 analysts covering NVIDIA. 0 recommend you sell it. 4 recommend you hold it. 34 recommend you buy it. But of course, it could dump tomorrow. It's up all-time highs. It's had massive growth for the year. Let's see. Year to date, it is up 45% in like a month and like 10 days. That's insane. Naturally, you have to assume that some people are going to be taking some profit. And Not just people, hedge funds, brokerages, institutions, banks, who have millions and millions of shares might be trimming back. If they purchased this thing a year or 2 years ago, they might be taking some gains, maybe. Meta, I like Meta. It's a great long-term investment for me. Tran says, what platform are you using? I use TD Ameritrade, which is now Schwab, and I use Thinkorswim. Is Jeppy a good buy? I like Jeppy. I just posted a video on it. If you want, you can go watch it and learn a little bit more. You have to understand the risks, though. There are always going to be risks involved. Jeppy isn't like a perfect single investment. You know, like a lot of inexperienced investors or casual investors just give me an index fund. I don't care. Jeppy is not that. Jeppy is not the equivalent of, it's an S&P 500 index fund. It will underperform. It even says on their prospectus, I think I might still have it open. Do I still have it open? I do. It says here, this is on Jeppy because I already had it up because I was making a video. It says the fund seeks lower volatility levels than the S&P 500. So they're investing in some companies, right? Jeppy has a hybrid approach where they sell some covered calls for passive income and they do some investing as well. But even they're telling you it's going to underperform the S&P. So Jeppy isn't a one-size-fits-all investment where you can just buy the one thing and be good. You will be missing out on growth. So one option is S&P 500 index in your portfolio and Jeppy. It's not always either or. It can be and. Thoughts on Lululemon? I see someone above saying, what's your website? It's just my name. It's kennethsuna.com. And you can click on the menu, which will be bottom or top, depending on phone or computer. And the menu will pop open. And it's got a free resource guide with all the links that I use to do my own research. People always say, well, what website is that? What website is that? It's in the guide. Lululemon is up 213% in the last 5 years, 821% in the last decade. So it's a stock that's already had massive growth, and it's trendy. It's like these Stanley Cups. You know, they're really hot for a minute or a decade, and then maybe they stay around forever. Maybe they're like a Nike or something that's like just there and it's always there. Or maybe people get tired of it and they go to find something else. Right now, Lululemon is $470. They have a 1 year price target of $520. That's around 10% move. There are 28 analysts covering the stock. Of those 28, 2 recommend you sell it, 5 recommend you buy it, 21 recommend that you buy it. All right, I'm going to drop down to the bottom. Victor Vargas, good morning. Can you look at Spotify? We're going to do like a little speed round here because I have a few minutes left on this live. I try to keep these lives under an hour. And there are 99 questions that I have not even gotten to. Spotify has a 1 year price target of $261, up 8%. Should I invest in Apple? I can't tell you what to invest in. Would you have said that about Polo 10 years ago? I don't know. I don't pay a lot of attention to Polo. Great YouTube videos. Check them out. He's charging nothing. Yes, go Jets. Thank you. My YouTube channel is totally free. Hey, Ken, how about crypto? I like crypto. I own a lot of it. I have a pretty diverse crypto portfolio. My largest 2 holdings are Bitcoin and Ethereum. What do you think about SMCI? I like it. I think it's overextended, so I'd be a little careful. Thoughts on Shopify? I think as more people branch out into e-commerce and start side hustles, it could be lucrative, but we read on Shopify. I think as more people branch out into e-commerce and start side hustles, it could be lucrative, but we read. Is everyone still here? That was really weird. The live just booted me, and I have lost all of the questions. I don't know why that happened. It just totally crashed on me with 1 minute to go. Super Bowl picks. I don't even know who's playing. I don't watch football. Kansas. I think they're in it, right? Everyone was talking about Kansas last week. Oh, and the 49ers. BITO. I don't really know enough about it to speak about it, to be honest. QQQ or QQQM, they're the exact same thing, so I would say pick the cheaper one. Rick Gilbert, what's moving the markets this week? So I'll read through AMC I wouldn't touch. or I'd only put in what I was willing to lose. On Monday, we have Monday.com, Arista Networks, and Waste Management. On Tuesday, Shopify, Datadog, Coca-Cola, Marriott, and Hasbro in the morning, Airbnb, Upstart, Robinhood, and Lyft in the after the market closes. On Wednesday, Sony, Kraft Heinz, and then after the market closes, Twilio, Cisco, and Occidental Petroleum. On Thursday, Crocs, John Deere, and Yeti, and Shake Shack, my favorite burger, and Wendy's also, and also another favorite fast food burger. And then after the markets closed on Thursday, DraftKings, Coinbase, Roku, and DoorDash, another big one. And then on Friday, pre-market, Arbor and Air Canada. So those are what I think people are going to be looking at. If I had to guess, I would say it's going to be all eyes on Airbnb. Hey, thank you for the heart. I think it's going to be all eyes on Airbnb and Shopify on Tuesday. On Wednesday, kind of quiet. On Thursday, DraftKings, Coinbase, and Roku will probably have a lot of attention, especially Coinbase now because of these ETFs. All right, everybody. I don't know what happened with the live. I'm very sorry. It booted me with like 3 minutes left. I usually keep these lives around an hour long, and it just booted me right in the beginning. Thoughts on a stock for a beginner, index funds. Don't try to overcomplicate it. When you leave this live, this is for Gela24. Go click on my video. It's pinned on my homepage. Investing for beginners, do this. Go watch that one. Where do you get all this information? On a variety of websites, and if you want it, there's a link in my website. On my website, it's kennethsuna.com. Click on the menu. Click on the free resource guide. All the websites that I use are there. I use TipRanks and Seeking Alpha today. And for the 1 year price targets, I use an Instagram account called Earnings Whispers with an S. NVIDIA's earnings are next at the end of February, I think the 24th. NVIDIA, I like it, but I'd be careful at these all-time high levels. Lisa, thoughts on Altria? I own it. I like it. People smoke. I mean, some people ethically can't invest or won't invest, and I understand that's totally fine. Burke B, one of my loyals, Kava. Yes, I love Kava, and it's up. I'm up a lot. Thoughts on Baba with the huge buybacks? I mean, usually when a company is buying back their stock, they think it's very undervalued and it's an opportunity for them. So that could be a signal for investors to say, wow, the company is buying back their shares. They think it's a real deal. And it is. I mean, it's $72 a share. The 1 year price target is insane. The 1 year price target on Alibaba is 105, 46% move. Can you link your guide? No, I can't. TikTok doesn't let me put links on, unfortunately. There is a link in my bio. When you leave my live, you can click on my bio. There's a link tree. It's going to say, oh, this is a dangerous website. It's just Linktree. You can click ignore if you want, or you can go on my Instagram account and click it through there, and there's no warning. It's just a weird TikTok thing. Linktree has my website. It's kennethsuna.com. It's just my name. Click on the menu. I can't put links in because they block it for spam purposes. Mikey, do you think we're in for an overall correction? No, I think markets go a little bit higher. I think a correction is due at some point, yes. But it's an election year. If the incumbent, that means Biden, if he gets reelected, markets will probably go up. It's just what the market's like. They like consistency. They don't care who's in the White House as long as it's consistent. So a one-term president, Wall Street hates it because the president comes in and says, oh, well, over the next 8 years, if I'm reelected, I'm going to do all these things. And then Wall Street goes, okay, got it. We know what this guy is going to do. Then he loses, and Wall Street's like, shit. Now we have to go through this whole process again. So much more volatility. Wall Street really likes two-term presidents, no matter who they are, because they can they can predict what's going to happen and how the taxes are going to affect and economic policies and all of that stuff. So, and we're hitting all-time highs right now, all-time highs. So I think Wall Street kind of, there's even something called it's like a stock market presidential election cycle theory that says that if the stock market is up in the year of the election, then the incumbent will win. And it's right like 70% of the time or something like that. Earnings Whispers on Instagram. Yes, that is the account. My website is kennethsuna.com. It's just my first name, my last name. Stan, guys, should I exit NVIDIA? I can't tell you what to do. Adobe. I see you're asking about Adobe a bunch, so we'll make Adobe the last one because I do have to wrap this live up. And then I go live every Tuesday, Thursday, and Sunday. Yes, I've seen Alvin and the Chipmunks. You're going to tell me that I look like David Cross. Let's see. Adobe is $6.27 per share. They have a 1-year price target of $6.53. Of the 30 analysts covering the stock, 24 recommend you buy it. I got a question. Do you think it's a decent idea? I think it's more than a decent idea. I think it's a brilliant idea. Yes, Mikey, do you have a percentage of cash you like to use? Yes. Usually it's around 20%. And I like to deploy that money in time. It's like my crisis, like I have a rainy day fund for myself. Like if I have a quiet month, I don't make a lot of money, I can dip into it, whatever. I also have a stock market rainy day fund where there's just money and it's just sitting there and I never touch it. And if there's a recession or a massive economic downtrend or a massive correction or stock market just absolutely tanks one day because of some event that happens and it spooks people, I'm going to jump in with that money and I'm going to buy as much as I can. What do you think about Amazon? I love it. I'll hold it for probably forever. Thoughts on gold? I think a lot of like conspiracy theorists like it because, if the dollar crumbles and all that, but it's also a good investment. It has fine returns. It's just not something I really bother to invest in. But there are some mining companies, gold mining companies. There are also some gold companies that you can invest in their physical gold and they just hold like the gold ETF. I think it's GLD. GLD. Gold. It is the gold shares ETF. It is up 47% in the last decade, and there's no dividend. They're single holding 100% gold. All right, everybody, I'm going to wrap this live up. If you didn't get your question answered, I'm so sorry. I try to answer everyone's questions. I also try to keep this live under 1 hour. Jung, I don't know what this thing is. It's a daily gold miners 2x leverage ETF. 2x leverage is ultra high risk. It has very high fees. I'd be very, very careful. Their grades are absolutely terrible. F across the board, except for liquidity, A+, because they just hold gold. They'll just sell their gold. Please answer before you go. What do you think of CLSK? Oh, someone asked me about this yesterday. I'd never heard of this company until a few days ago, and then multiple people started asking, which makes me feel like there's a content creator on this app who's pumping it up. It's up 32% in the last day, so that makes me a little weary. It's up 26% year to date, 330% in the last 12 months, down 60% in the last 5 years, and since going public, it is down 65%. They are an application software company. I don't know too much about it, so I would be very careful, especially in something that's already up 300% and was a penny stock just a few months ago. It has 4 analysts covering it, so not a lot, which also gives me pause. 3 buys, 1 hold, an average price target of $11. It's over that now. The highest price target is 15, the lowest is 8. I would only put in what I was willing to lose. It's massively overvalued. Have you ever had a stock go through a reverse split? Yes, many times. Most of the penny stocks I invested in when I was young and had no idea what I was doing have all done reverse splits, and since then are down 90% and have delisted. Many of them have delisted. So be very, very careful. Reverse splits usually a sign of trouble. All right, everybody, thanks for watching. For some reason, I have a thing down here that says learn more about the US elections. Is that because I was talking about the election and it just knew? That's how good this algorithm is. All I had to say was president, an election, and a thing popped up saying register to vote. And it says my state is Alabama. My state is not Alabama. All right, but everyone should vote. All right, everyone, thanks for watching. I go live Tuesdays, Thursdays, and Sundays at 10 a.m. I will try to answer as many questions as I can in that time. And if you missed it, just come back later. I go live 3 days a week. I will download this video and put it up on YouTube. All right, thanks, bye. Have a great weekend, everybody. Bye, Robin. Oh, where's Robin? I think she might be outside. I'm in Georgia right now, but I live in DC. All right, bye.